The US retirement system just experienced a seismic shift. For decades, 401k accounts were locked into a narrow menu of safe choices: mutual funds, index trackers, a sprinkle of bonds, and maybe a small-cap growth option if you were lucky. But with one signature from the president, crypto, once deemed too volatile, too fringe, too unpredictable, has burst through the gate. The executive order didn't just legalize crypto in retirement accounts, it legitimized it. It made Bitcoin, Ethereum, and digital assets part of the American financial future. That means crypto is no longer a speculative toy for tech bros or early adopters. It's now a strategic piece of retirement infrastructure. The market reaction? Explosive. Bitcoin surged past $120,000, Ethereum followed, and behind the charts, institutions began rearranging their portfolios like tectonic plates. What we're seeing isn't hype, it's history. Americans currently hold more than $12 trillion in 401k accounts. That's $12 trillion that have been, until now, unable to touch digital assets. Even if just 1% of that moves into crypto, we're looking at a tidal wave of liquidity. That's over $100 billion in fresh capital flowing into digital markets. And that's just the beginning. As retirement advisors race to offer updated plans, and as employers seek to stay competitive with modern benefits, crypto allocations will likely become the norm, not the exception. Just like ESG funds or international exposure, Bitcoin may soon be a checkbox in your employer-sponsored plan. If you're an investor, that means one thing: don't wait for the herd. This new opportunity isn't automatic. You need access. Start by logging into your current 401k plan. Does it support self-directed options or alternative assets? If not, it might be time to open a solo 401k or initiate a rollover into a crypto-friendly retirement provider. Providers like iTrust Capital Choice or Alto IRA already offer digital asset support in retirement accounts. The catch? Not all employers will make the switch immediately, so don't assume you're locked in. You have choices, explore them. Tip: open a Roth 401k if available. That way your crypto gains grow tax-free for decades. It's the best-case scenario if Bitcoin continues to appreciate. Let's be clear, this isn't about putting your entire retirement into Bitcoin. That's reckless. But, adding just 3 to 5% to a diversified portfolio, that's called smart exposure. Historically, even small allocations to crypto have honestly dramatically increased total returns. Why is that? Well, because Bitcoin behaves differently from traditional assets. It's asymmetric, meaning the upside is far greater than the downside if managed properly. Use dollar-cost averaging. Stick to a monthly or quarterly contribution schedule. And hey, avoid emotional decisions. Crypto isn't a sprint. It's really an endurance game. Crypto's volatility scares most traditional investors, but, that's where the opportunity lies. Traditional markets move slowly. Crypto can deliver decades' worth of movement in a single year. If you know how to manage that risk, you can use volatility to your advantage. Diversify, rebalance quarterly, set stop losses where necessary. But most importantly, stay in the game. Long-term holders have always outperformed traders. If Bitcoin dips 30%, most will panic. You won't because you planned for it. That's the mindset that builds wealth in this space. Many retirement plans that claim to offer crypto exposure don't actually give you real coins. Instead, what they offer are paper vehicles, like funds, trusts, or ETFs, that just simulate Bitcoin without actually giving you direct access. Always, and I mean always, ask, can I withdraw the crypto into my own wallet? If the answer is no, well, you might only be holding an IOU. For serious investors, direct custody is king. It lets you move your assets, stake them, or transfer them to cold storage. And honestly, if your provider doesn't support that, it's probably time to look for one that does. One of the biggest reasons to invest in crypto through a 401k, the taxes. In a Roth 401k, your crypto gains grow tax-free. That means if Bitcoin increases tenfold in 10 years, your withdrawals are completely untaxed at retirement. That's a generational wealth tool right there. Even traditional 401ks offer tax deferral, allowing you to grow wealth without paying capital gains every year. This gives your portfolio, compound rocket fuel. More money stays in play year after year. So here's a tip. If you're actively trading, you'll want to keep that in a standard account. But if you're holding for the long game, it's better to use retirement plans. Honestly, most retirement advisors don't really understand crypto. They were well trained to follow the rules of the 1980s. Buy blue-chip stocks, ignore volatility, and just trust the system. That mindset, though, it's going to leave you behind. You need to work with someone who actually gets it. Someone who sees the potential in digital assets and knows how to manage risk, without clinging to those outdated strategies. So, when you're sitting down with a potential advisor, just ask direct questions like, do you support digital assets in retirement accounts? Can you help me allocate safely without overexposure? And have you worked with clients who hold Bitcoin or Ethereum? If the answer is no across the board, honestly, it's probably time to find someone new. When the United States government opens the gates to crypto in 401ks, they're not experimenting, they're endorsing, and that's a big deal for the future of retirement. This executive order isn't about chasing headlines, it's about signaling to the world that digital assets are now part of the institutional future. Just like the internet moved from nerds' basements to boardrooms in the early 2000s, Bitcoin is moving from Reddit threads to retirement portfolios. This is your chance to be early again. The people who took crypto seriously in 2017, they're retired now. The ones who ignored it in 2020, they're still playing catch-up. Which side will you be on? Most people retire hoping they have enough, a bit of savings, a modest 6% return, a plan to stretch every dollar, but you can do more than hope. You can position, you can build, you can retire rich. Crypto isn't magic, but it is math, and math paired with strategy is unstoppable. Make the moves now, learn the system, get the right provider, start your allocation, watch it grow. And when your grandkids ask how you did it, you won't say, I played it safe. You'll say, I bet on the future and I won.